The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Now, I picked the stock of the day being Endeavour. So you know it, Dan Murphy's, think of hotels as well. It's expecting a drop in group profit for the first half to between $400 and $411 million. Price cuts and promotion drove sales growth, but at the expense of margins and profitability, something we saw with Super Retail yesterday as well. Endeavour says that total sales rose by 1% to $6.6 billion for the first half of the financial year. However, specialty store sales were down by more than 16%. Sales growth for Endeavour's hotels business rose 4.4%. RBC Capital Markets, for one, has a negative sentiment on the stock with a $4 target price. So it's still higher than where it sits today here, just past noon in Sydney. Okay, so Endeavour Group really is, and actually, I'm going to start with you, Sanjeev. Is this looking good value for a company that, I mean, it's going to survive, even if tastes toward alcohol consumption do wax and wane?
Oh, look, I love what they sell. So I'm always down to visit Dan Murphy's, but it's, if you're looking at it, the product that they deliver and the business of it is very different. So they've got a lot going on at the management levels. There's been changes, even as of yesterday, or was it this morning, that there was an announcement on some change in management. They need to get through a lot and get their strategy right and actually start looking at growing the business, because the business has been around 4 years, so it's still way short of what we'd look at Team Invest. But it's a business where the profitability has gone nowhere. So before we'd consider looking at it as an investment, I'd like to see them do a bit more.
All right. Well, it was around just under the Woolworths brand prior to that. So this is a bit of a profit warning coming through. We're in that season, ahead of reporting season. Is this a potential turnaround story? Like, is there value here? Because we do have the new CEO, Jane Hrdlicka. She's got her Bain and Associates consultants behind her.
She's not free of criticism. We need to do this on a regular basis. Let me throw in Warren Buffett saying, most turnaround stories never actually turn around. And because share price is cheap, it doesn't mean it's great value. If you look at the share price over a long time, ever since they were separated from Woolies, it's basically a declining trend line. I mean, it just goes down and down and down. That doesn't mean that the share price keeps falling forever and ever. At this point in time, assuming they don't have to cut their dividend too much, you probably get a very healthy yield here, 5%. And since they only operate in Australia, that would be fully franked. But the essence is, I think there's two ways there's a couple of ways, but let me highlight 2 points. One is, economists in Australia are getting all excited because consumer spending has surprised to the upside. 2 months in a row. We yet have to get December, of course, but they're all getting excited about that. So the RBA is going to raise interest rates, apparently. My focus is on the share market, and what I've noticed since September, October, November last year is retail companies are more likely to disappoint when they update the market. So clearly there is a disconnect between whatever the ABS registers and how economists look at the Australian economy, and how companies who actually are dependent on consumer spending, how they are faring in the share market. Not too many see their share prices really go up, and they have difficulties, as with Super Retail this week, as with Endeavour now, to actually report positive momentum that is strong enough. I mean, these guys, they try to dress it up as momentum is picking up in December, but then they also have to announce a few of write-downs. I mean, the contract with Woolies, a few other things. The negative news doesn't necessarily stop because the share price has fallen or the share price is looking cheaply. I think in general terms, this emphasizes for me again why I'm a little bit more cautious on companies who are directly dependent on consumer spending. We should all remember it's only a few weeks away and we will have reporting season. Ta-da! Right? And
aging me.
and if this week's, we also had Coden, admittedly, but if this week's early indications are any signals to us, I think we will have a very volatile February. And I'd be very cautious with consumer sentiment companies. I'm a shareholder myself in Sigma, and I think that's one of the better ones, least risky ones at this point in time, I think, in that sector. And that is probably also reflected in a higher valuation. So in this case, I don't think you should chase it because it's cheaper and it's falling. If you already own it, you probably own it for the defensive characteristics and for the dividend yield. The dividend yield thesis, that remains intact. But I wouldn't expect too much in terms of share price performance at this point in time. So no need to chase that one.
Not a lot of love for Endeavour Group, which was our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.